Let's see now if I can get hold of Magnus, who's our guest this week. He is the man in charge of Jupiter's investment trust business. I think I've got your title right there, Magnus. Is that right?
That's spot on, James. Good morning and thank you.
Good morning. So I thought it's great to have you. I mean, I think the idea is really just if you could give us a bit of a rundown of the business and the funds that you've got at the moment and what plans are for the future. But given it's such a big issue, maybe we could start with talking about what's going on with the tie-up between Jupiter and Merian.
Yes, sure. So Jupiter announced back in February that it would be acquiring Merian Global Investors, and we are hoping that that deal will be approved by our shareholders on the 21st of May, and that the acquisition will be consummated sometime in the third quarter. That date is slightly in flux because of COVID-19. It is very difficult, of course, to do a deal when everyone's working from home, but we're making progress in that regard. The tie-up's interesting. I think there's a number of reasons why Jupiter's decided to do it. Firstly, there's a good strategic fit, actually. Merian have two really big teams. One's a systematic equity team, and the other's their UK mid and small cap team, which manages the Merian Chrysalis Investment Trust. We don't have systematic capabilities, and our UK small and mid cap capability is somewhat small, so that's really attractive to us. They've also got quite a few assets in areas which we're looking to grow, where we have capabilities as well. So we hope that will accelerate our growth. So that's the sort of strategic fit. We like them, they like us. They're quite similar-minded. They're investment-led, all based in London. At least the managers are all based in London. They're fundamental, independent teams, and we think that's going to fit in nicely with us. And frankly, there was an opportunity. Merian was brought to us as an opportunity, and we thought the price looked attractive. And of course, as everyone knows, asset management as an industry is under pressure. And if you're in the squeezed middle, which I think Jupiter and Merian are, then bulking up together can make a lot of sense, particularly in the UK, where it will give us a very, very strong position in the retail space. So that's the deal. How are we coping with COVID-19? Well, personally, I was coping very poorly until yesterday because I had toothache, and it was virtually impossible to find a dentist to deal with my teeth. But yesterday I managed to find a delightful chap based in Maidstone who claimed to be a dentist. He was dressed as a spaceman, so I have no idea if he was or he wasn't. But he did my root canal filling, which was giving me a lot of pain. Okay. So I feel like a new man today.
Yeah, you didn't try with a pair of pliers then?
No, I actually, if he had, I'd have been quite happy about that as well. It was sufficiently painful that I would have gone along with it.
Cool.
But, generally, as a business, I think we're coping all right, actually. I've already been working from home one day a week for a number of years, so the tech works really well. I think we're all communicating well. The deal is difficult. You know, you're trying to work out how you're going to get on with your new colleagues, but you can't meet your new colleagues, so you do everything over Skype and that sort of thing. That's a bit weird. But otherwise, I think it's okay. You know, I just remind myself that asset management is actually a remarkably fortunate business. We continue to receive our income. Sure, it's down a bit because markets are down a bit, but we have no worry about bad debts. We know where the cash is. We're allowed to go in and take it, as long as the custodian approves that. And you know, things continue on a daily basis.
Reacting? Are they being sort of sensible, or has there been money flooding in and out?
No, it's been actually remarkably little inflows and outflows. There was a little flurry at the start of COVID out, but we've seen a steady trickle in now. I think one of the biggest issues which our investors are talking about is, and this is particularly wealth managers and retail investors, it's how to replace the income that they would have got from their UK equity portfolios prior to COVID. You know, in Shell's announcement, first cut in their dividend since the Second World War. There was only one before that, and that was in 1929. That really just sort of highlights the anxiety for investors who require income at the moment. And of course, what that means, I guess, is that all these investment trusts that hold alternative assets, such as the supermarket trust you were talking about earlier, become very attractive. Doesn't surprise me at all that they raised a lot of money yesterday. It seems like exactly the right thing to be promoting to investors at the moment.
Good. All right. So let's talk about some of the existing funds then. I don't know which one you want to start with. I've sort of slightly random order on there as it occurred to me in my head. Maybe that's supposed to be alphabetical. Especially, I suppose Jupiter UK Growth is an interesting one because that's you're replacing the manager with Richard Buxton.
Yes, that's right, James. So we've had a period of difficult performance on that trust. And the board announced last autumn that they were going to review the management arrangements, and then announced in February this year that Richard Buxton of Merion, Global Investors fame, would be taking over the trust just as it originally envisaged to be the end of April, but that's had to be pushed back a little bit to allow for us to get the shareholder vote on Jupiter buying Merion through. So we're now expecting Richard to take over on the very shortly after the 21st of May when we have our AGM and that shareholder vote. So in the meantime, we've put in place a transition management team, which is led by our Chief Investment Officer, and they have been transitioning the portfolio from the old positioning under the old manager to Richard's strategy, and yeah, it's fair to say that the portfolio is pretty much in line with what Richard would want it to look like now, so that on the date that he formally takes over, he won't then have to work his way through a portfolio and change it around. It'll be good to go. So,
was that quite a wholesale change, or?
Yeah, I think if I had to sum it, I would say there was about 20% of the holdings which we kept.
Okay.
The rest have been changed. The big difference is we've moved from being primarily FTSE 250 focused, I would say, to being larger cap focused.
Okay.
Which is totally consistent with the way Richard manages money.
Okay, cool. And assuming that doesn't cost a lot to get that done.
Yeah, it was a few basis points. You know, we were very keen to make sure that we weren't transitioning the portfolio during some liquidity crisis associated with COVID, and yeah, we've done it very, very effectively. It's a small trust.
Yeah.
It's only £30, so you're not going to be moving markets significantly.
Cool. So he has a sort of fan club. Do you think you can actually grow this fund from here?
Well, I think the first thing to do is to stabilize performance, reassure investors, and build a sensible and stable record over a period of months. And that's exactly what Richard and his team are focused on doing. So that's the first activity. It's pleasing to see that we're outperforming in April, that Richard's outperforming in April. From there, you know, if we're going to grow this trust, we've got to come up with something to make it a little bit different, a little bit more exciting, and you know, that's something that in the fullness of time we might look at, but hopefully we will look at. But for the time being, it's all about just stabilizing the strategy, using the Merion Alpha, the proven ability of the Merion Alpha process to deliver stable returns relative to our benchmark.
Cool. Okay, good. Again, sort of random on the list, but Jupiter Green is a fund that I've always liked the idea of, and always been amused that it's not bigger than it is.
Yeah.
And Charlie Thomas, I've always liked as a manager as well. So you said a bit about how that's going, and
I'd love to, because like you, I just feel this is a wonderful opportunity for us to start growing our investment trust business, and hopefully, you know, for investors as well. So just to be clear, Jupiter Green is one of these entities that has a really clear corporate purpose. It's trying to solve the world's environmental challenges by investing in companies which are designing and implementing the solutions to those environmental challenges. I mean, what could sound more appealing than that, James? To you, me, or the world at large? And Charlie and his team are focusing on 7 investment themes to do that. The circular economy, as they call it, clean energy, water, mobility, energy efficiency and environmental services, and sustainable agriculture. And I'm just going to give you an example of one stock he holds, which kind of illustrates why I really think this investment trust has opportunity. It's a French stock called Hoffmann Green Cement. Now, the cement industry as a whole around the world, if it was a country, would be the third largest emitter of CO2 after China and the US. So it's a significant contributor to the CO2 problems in the world. And Hoffmann has come up with a technique which produces cement with 1/5 of the carbon emissions of normal cement. That has to be an attractive technology to help with environment solutions. So that's exactly the sort of company that this portfolio holds. And that company's growing and seeing huge potential. In fact, the stock is up 5% this year. The second point I'd just make on Jupiter Green is the effect of COVID undoubtedly pushes climate change off the top of the agenda for a period of time. Yeah. But I do think society at large has enjoyed the clear skies, the lower amounts of pollution, and some of the travel-saving technologies, such as the thing we're using today. So I am pretty convinced that society will change post-COVID. And one of the examples that Charlie was mentioning was that the EU's putting environmental issues and its Green Deal at the centre of the European COVID recovery plans. So, from these periods of huge dislocation, you often get accelerated changes, and I do hope that that will allow Charlie's trust to really get going again. And my final thought on this trust is that investment choices, a little bit like food that we consume and holidays that we take, is increasingly becoming something that speaks about us as human beings and who we want to be. And so I think for anyone who genuinely puts green issues at the centre of their life, this investment trust, that's exactly what this investment trust does. Its purpose is exactly that. So there we go. That was a bit of a sell for Jupiter Green, but I do think it's a great thing.
I do completely agree with you in terms of the message. I mean, so it's got the advantage that it's got the zero risk and control mechanism, so it can expand quite easily, and investors don't have to worry so much about the prospect of the discount widening afterwards, which should help. I suppose it's just connecting with people who actually think that that's something that they want to value, because I mean, I suppose it's whether you're driven entirely by the numbers or whether you actually want to do something a bit more altruistic with money. But yeah, and I do think that this is a
I hope that. Sorry, because I mean, I hope the two are not mutually exclusive, of doing the right thing and getting good investment returns. I hope coalesce with each other. But your point about finding the investors is absolutely the right point. And we've got to work harder at accessing those investors. We know other trusts in the space have done very well with growing assets, and we need to do that ourselves, and that's what we're focused on doing.
Cool. Okay, good. Jeffy's a fund we know very well. And I suppose just the general sort of flight to safety thing, Frontiers and Emerging hasn't done amazingly well in the last few months, but I would guess that the underlying companies are coping. Is that the sense that you get?
Yes, I think so. We were looking at it the other day. The manager, Ross Teverson, was saying to me that over a third of the companies in the portfolio have no net debt, and therefore have a net positive cash position. That's encouraging. That means that they're reasonably strong from a sort of balance sheet point of view, which is important at this point in time. However, a number of them are banks, for instance, and banking regulators around the world are imposing restrictions on their banking supervised clients around the amount of dividends they pay. And so, that is hitting their share price, and it's hitting our dividend income to some extent. But your point is absolutely right. We entered here thinking emerging markets looked really exciting from a price point of view relative to developed markets. and that's just got even more exciting. So there's plenty of ups, without a doubt. But I don't know. It's hard to judge how much COVID's going to affect emerging markets. On the one hand, people are saying, well, it's younger demographics, therefore it won't affect them as hard. People are also saying it's really hard to impose lockdowns on informal economies, so they won't have the economic hit that the developed world's had. But let's see. But either way, Ross finds great companies which are underappreciated, which have pretty strong balance sheets, and I'm sure this company will have its day, both from a performance and growing point of view. Whether it's tomorrow or whether it's in a few months' time or a year's time, who knows? But cheap prices today, that's for sure.
Yeah, cool. And then Gypsy Smallers is, I suppose, one of the newer funds actually in the stable because it came from F&C, with quite a long-standing manager, Robert Siddles. How's that doing in this environment?
Yeah, it's had a tricky COVID actually, and I think the reason for that is that the sort of stocks that Robert holds, which are companies which are he's holding because it's safety first. He buys companies which have limited downside risk, have not actually performed that well through the crisis from a share price point of view. The most resilient stocks in the markets have been sort of great at any price type stocks, and therefore holding sensible, safe companies has actually hurt you from a share price point of view. So Robert never sits on his hands. He's been tilting the portfolio to more reliable growth. He's been looking at some tech-enabled stocks, tech and healthcare stocks, hospital pharmacy automation companies. He's added 6 stocks of this kind during the crisis, in addition to 5 he bought in the run-up to the crisis. So the technology exposure is now 18% of the portfolio. Holdings, his largest position is Palomar Holdings, a fintech insurance player that uses data-driven approach to assessing when earthquakes are going to take place. So it's had a tricky time. Small cap has generally, but Robert's made some changes, and we'll watch this space.
It's just a bit like Jeffy is one of these things who all these things have just got cheaper, and when it comes out the other side, you get a bit of a rebound. So okay. And then Merian Chrysalis. I mean, the idea of this is that they buy things just before the IPO. I suppose it's trickier at the moment with the IPO window shut. Does that cause them any real problems, do you think?
I'm not sure it does actually, no. I don't think they are. So most private equity firms, the whole raison d'etre is to find an exit, isn't it? Whereas I think this team are very happy to keep a company or to have a company private for a long period of time. They don't have an urgency to get an exit. And actually, the portfolio is quite interesting. This is almost the opposite of the US Smaller Companies Trust. They've got 10 holdings. Most of them are tech-enabled. So, look at the listed space, you'd expect them to have held up pretty well. The team really do see pandemics as like any other recession. The dislocation accelerates disruption, and that will play into their hands. So positions they've got in companies like The Hut, which is an online retailer, or Klarna, which does online retail payments processing. These are all having a good COVID, if you like. Got very little exposure to leisure or the travel sector, so that's going to help. They've also got a real mixture of early stage and late stage investments. And those later stage investments are profitable. They're not looking to raise capital. So I think the team feel really reasonably well positioned through this. And it's interesting, they were telling me that the top 6 holdings they have, so they only have 10 holdings, but the top 6, which represent 86% of the investments, have all raised money pre-COVID in the last 12 months, and therefore have very strong cash-rich balance sheets. And the trust itself has quite a bit of cash. So they're excited at the opportunity that COVID presents for them to deploy the cash. They haven't done anything yet, but they see opportunities. So, interesting seeing your chart earlier about the discounts on private equity companies. This company's trading on a 16% discount, and I think the team are excited about the future.
Yeah, I mean, actually, and if you looked at the discount on HG, which, hang on, let's go up there again, which I suppose would be the closest thing given the tech bias, but that's only 10.6. So, yeah, maybe it's a bit out of where it should be. Cool. All right. Thanks so much for that. Right, so we'll now open it up to questions. Same as before, so if you want to ask a question, either email me at jason@martinco.com or send something through the chat. And as we've been talking, there's a few things come up, so let's just have a look. There's a couple for me as I was going along. I'll just handle first. First, let's talk about SQM. So, is there anything that the management team can do under the KKV umbrella that they couldn't do under SQM? I don't think so. The main change that I think that's going to happen there is that with Dawn in charge, the underwriting process will be tightened up. I think they were conscious that they needed to do that anyway, and I do think she's actually quite good at that. So that'll be the main change, I think. Oh, one thing I didn't mention actually is in the private equity and cash. One of the big investments in a couple of these private equity funds is a supermarket firm called Action. Just going back to what we were saying about how well supermarkets are doing. That actually got refinanced last year. It's in the Princess portfolio. It's one of the reasons actually that they don't really have a problem. I think it's 12% of their funds, which is a fair chunk of money. And they managed Partners Group. Partners Group has sold its stake in Action to another private equity firm, so they're going to get cashed out. And they've made 36 times their money on that investment, which is just crazy when you think about it. But Standard Life Private Equity, it's also its biggest investment. Their access isn't through Partners, it's through 3i, and actually they're hanging on to that because they see further upside. So I just thought, yeah, so Princess, even though it looks like it's completely fully invested, it's got a big chunk of cash coming. One for you, Magnus. Are you going to stay in the Zigzag building, or are you going to move offices?
So the plan is to stay pre-COVID. The plan is when we acquire Merian, to stay in the Zigzag building. But I kind of suspect we're only going to need about 3 desks because everyone's going to want to work from home post-COVID. So who knows? We might be coming to join you down in Chelsea, which would be rather fun, wouldn't it?
Yeah, definitely. Is this Merian deal one of many to come, or would you look to keep buying other asset management businesses?
Oh, no, that's the million-dollar question. So our chief executive, Andrew Formica, who's been in place for about a year now, and was previously at Henderson's, has done a number of transactions in this space in his career. When he came to Jupiter, he was the papers and things sort of said, "Oh, Formica, he's just going to do some deals, isn't he?" And Andrew said, "Absolutely not. That's not what I'm doing. I don't need to." And then Merian came along, which was just a wonderful opportunity. So I think that was a one-off. I don't think we have any plans to go on an acquisition spree. We've got some great managers actually who need to grow. Quite young managers who have performed really, really well, young in age or young to us. And it's really important to focus on what you've got as well as what you might have. So my own personal instinct is not.
Okay, fair enough. But just in the trust side of things, are you on the lookout for other mandates, other any plans to launch anything else in any other sector?
Yes, absolutely. We are light of assets and strategies in investment trusts. We are very committed to the space. We want to build on our presence today. So we are actively out looking at opportunities to do that. So yes, obviously our experience and our skill set, James, is in listed equities and listed bonds. That's what Jupiter is known for. So it's more likely we will be looking at things in those asset classes. But we recognise a lot of the growth and the excitement is in the alternative asset classes. So we are, paying attention to that as well. And we have a fund of alternative investment trusts run by Richard Curling. So we have within our firm quite a lot of expertise on the asset class as a whole. So yeah, we're really, really committed to growing our presence in the investment trust space.
Cool. Do you have a favourite? This is one of the questions here.
A favourite what?
Favourite trust.
Within our stable?
Well, I suppose
That's it's like asking me if I've got a favourite.
Maybe within a bit too. Yeah, exactly. It's a bit too politically difficult. What about the favourite trust outside of Jupiter?
Oh, okay. Well, the one I've been looking at actually. You had the chief executive on your show last week. I've been looking at the energy storage fund. It's a million miles away from what Jupiter does, but I think that's quite interesting.
Yeah, I definitely the whole battery space is all that thing is very interesting. Yeah.
Yeah.
Mm-hmm.
And then of course Hypnosis, which is just such an exciting and uncorrelated way of getting a return. You have to it's good with your kids when you say you own a bit of the music they're listening to. Exactly.
That's what always gets the traction is when they announce a sort of star acquisition. Still, people don't really know how they make the money, so it's all a bit smoke and mirrors still. So yeah, maybe we need to get them on the show as well. So good stuff. I think we've covered everything else looking at this. So I think it just leaves me to say thanks very much, and thanks very much, and look forward to talking to you again soon. We'll be back not next Friday because that's the bank holiday for V-Day, but the Friday after. Actually, we've got somebody from Vietnam Holdings talking. So if you've got any questions about Vietnam, save them up for them. So thanks again, and see you soon. Bye.